Hey there, welcome back to our channel. In today's video, we will be talking about Chapter 2 of The Intelligent Investor by Benjamin Graham. The chapter is titled The Investor and Inflation. In this chapter, Graham focuses on the impact of inflation on investments and provides guidance for investors to protect their portfolios against the effects of inflation.
Graham begins by defining inflation as an increase in the supply of money and credit relative to available goods and services. He notes that inflation can have a significant impact on investments as it erodes the purchasing power of money over time. This means that investors must be aware of the effects of inflation when making investment decisions.
One of the key strategies that Graham recommends for protecting against inflation is to invest in stocks rather than bonds or other fixed income securities. He notes that while bonds may seem like a safe investment, they can be highly vulnerable to inflation. This is because inflation reduces the purchasing power of the interest payments that bonds generate, which can significantly reduce their real return.
By contrast, Graham argues that stocks have historically been a better hedge against inflation. This is because stocks represent ownership in companies, which have the ability to increase their prices in response to inflation. This means that stocks can potentially generate higher returns than bonds or other fixed income securities over the long term. However, Graham notes that not all stocks are created equal when it comes to protecting against inflation. He advises investors to focus on companies that have a strong track record of increasing their earnings and dividends over time. He notes that these companies are more likely to be able to maintain their value in the face of inflation.
Another strategy that Graham recommends for protecting against inflation is to invest in real estate. He notes that real estate can be a good hedge against inflation because it has the potential to generate both rental income and capital appreciation. He advises investors to focus on properties that have strong cash flow potential and are located in markets with stable or growing populations. However, Graham also notes that investing in real estate requires significant expertise and effort. He advises investors to carefully evaluate their own skills and resources before considering investing in real estate.
Another key point that Graham makes in this chapter is the importance of diversification. He notes that while stocks and real estate can be good hedges against inflation, they are not foolproof. He advises investors to diversify their portfolios across a variety of asset classes, including bonds, commodities, and international investments.
Graham also stresses the importance of maintaining a long-term perspective when investing. He notes that while inflation can be a significant challenge for investors in the short term, over the long term it tends to average out. This means that investors who are able to maintain a diversified portfolio of high-quality investments over the long term are likely to be able to weather the effects of inflation.
Finally, Graham notes that investors must be aware of the potential risks associated with inflation. He notes that inflation can lead to social and economic instability, which can in turn have negative effects on investments. He advises investors to carefully monitor the economic and political environment in which they are investing and to be prepared to adjust their portfolios if necessary.
In conclusion, Chapter 2 of The Intelligent Investor provides valuable insights into the impact of inflation on investments and strategies for protecting against its effects. Graham advises investors to focus on stocks and real estate, to diversify their portfolios, and to maintain a long-term perspective. By following these principles, investors can build a resilient investment strategy that can withstand the challenges of inflation over time. So that's it for today's video. If you enjoyed it, don't forget to give it a thumbs up and share it with your friends. Also, make sure to subscribe to our channel for more videos like this. Thanks Thanks for watching and we will see you in the next one.